Hello and welcome to Inside ETFs. I'm Ramzan Karmali. Today we're looking at the cannibalization of the mutual fund industry by ETFs with Scott Chronert, Global Head of ETF Research at Citigroup. Earlier this year, assets invested in the ETF industry in the United States hit a record of $10 trillion. In fact, this year investors have poured record sums into them, even before a fresh buying spree was sparked by the election of Donald Trump. According to BlackRock, in the first 10 months alone of 2024, global net inflows stood at $1.4 trillion, easily beating the full-year record of 2021. US investors, though, have been gradually switching from mutual funds to ETFs over the past decade. Data from the Investment Company Institute shows that mutual funds, excluding money market funds, have seen net outflows in 9 of the past 10 years, while ETFs have seen constant inflows. Well, so can the rise in popularity of ETFs continue? And will this be at the detriment of the mutual fund industry? Well, to help answer that and more, I'm joined by Scott Chronert from Citigroup. Scott, thanks so much for joining us. So let's start with the obvious. What's driving this rush into ETFs?
Well, I think the use case for ETFs is clearly expanding. The tradability and the tax efficiency stand out. The ability to access index exposure at a very low expense ratio are all attributes that have fueled the initial phases of the growth in the ETF industry. We think there's a lot of room to come, though, but essentially what's happening here is retail adoption, increasing institutional and trading use cases, along with the ability of utilizing ETFs in various forms of model portfolios and asset allocation approaches, all have contributed to the extensive growth that we've seen over the past decade.
But what does this actually mean for the asset management industry? Does this mean the end of the mutual fund industry?
Well, our view is that over time, we can see the ETF movement encroach into that portion of the mutual fund industry that is X those that are in, let's call it tax advantage funds. So we see a $6 to $10 trillion opportunity for ETFs to continue to cannibalize from mutual funds over the next 5 to 10 years. Again, we think the remaining enclave for mutual funds will be in this tax advantaged defined contribution part of the market.
Could there one day be a case where ETFs actually overtake mutual funds?
Well, we think the math kind of points in that direction. There's a very strong demographic element that comes with this as well, as you see wealth transfer effects over time as the aging population continues to demonstrate, a general dynamic where elderly, let's call it baby boomer generation that has been very accustomed to using mutual funds begins to see a wealth transfer effect to their heirs, which have grown up in an era where ETFs are much more front and center in terms of an opportunity set and opportunity case, if you will, for investing for that upcoming generation of investors.
And Scott, what type of ETFs are proving popular at the moment?
Well, the big growth this year really has been in core S&P 500 exposure, along with, let's call it, core equity market exposure. So the pattern of this past year anyway has been that we've seen very strong market appreciation. We're looking at sort of the second year of, let's call it, 20% plus returns in the S&P 500. No doubt this has had an underlying force from the Mag 7 mega cap growth component, which has kind of shown up in some of the growth ETFs. But generally speaking, what's happened is that what you've had is a sentiment shift here where more and more assets have been coming off the sidelines into core U.S. equity exposure, defined principally by the S&P 500, but in also broader equity market indices. That's been the big driver.
So, Scott, it's taken around 30 years to hit the $10 trillion mark. How long do you think it might take to hit the next 10 trillion?
Well, we think the next 10 trillion can happen over the next 5 to 10 years, and it's really a function of these trends that we put in motion here that are already in place. And so I think that's an appropriate time frame. Certainly, appreciation in the underlying equity markets and to a certain degree the fixed income markets are to the benefit of both the ETF and mutual fund industries, but we think this trend is pretty undeniable, and the asset growth is going to continue to manifest more so in the ETF path than via mutual funds.
Interesting stuff. Scott Chronert from Citigroup, many thanks for your thoughts. And that was your look at the demand outlook for ETFs. I'm Ramzan Karmali, and this is Reuters.